So this is pretty much all we did this week. So basically 75 share loss on this one from 38, oops, from 38.42 to this whatever where it went. I got a different mouse here. The other one is I got two mouse on my 48.35. So this one and a coin. Those are the two went against us. And then the rest were all fine. So I think overall everything looks good. Oh, and obviously this one. Yeah, I usually wakes up around like 4:30 in the morning. So at 1 o'clock, I got the alert on my phone when I woke up and looked at my phone. I was like, what the hell? And then I looked at the price, the futures, it was trading at 64.05 or something. So I got in at 63.93. So I was risking like 23 points to the downside. So then a couple of, when the market opens, and just got to rip right back up. It's okay. $320, not a big deal. Um, yeah, futures, IONQ, the quantum stock, and the coin. Rest are all good. Rest we just gotta give some time. Um, this stock right there, just I was watching yesterday. I don't know if I know the other guy, Frank, he has it. This stock is doesn't want to give me 56, that was a nice trade. I had no idea about this, like what this company does, to be honest. I have no clue. All I did was same five up, three down, just to play a measured move. These are like a classic zigzag patterns, especially with the swings as well. So got an entry and 43.60 still open. I got a alert set at 56. Yeah, they stopped them yesterday at 55.90. So like really? So we're almost there, so trade is up like a little over $900. It's this is like I don't know, like a 28% move from here to here from the entry. So we'll see. I mean, the only reason I'm going to cut this one um, is because it has a outside monthly bar. See the monthly bars engulf. So it's gonna plus you have this channel resistance here as well. So this is gonna be a very kind of little sticky spot right there. So you got a 56.42 along with this channel resistance up here. So, you know, I mean, what, 43.60, 43.60 times 74 is spending $3,270 to buy 75 shares to make 900 and what, 30 bucks. It's not bad. So we'll see. Um, yeah, I am recording. Um, yeah, I mean, the wave counts and stuff and go through them. I just I like to stay on a bigger time frame, much better, less noise, instead of sitting and fighting your life over ABC on a 1 hour chart all day. Try to I'd rather just trade swings over changing these goalposts every single day. So we'll see. I mean, market is definitely looking to see if it can if it's to see if it can test this 200, which is at 6,500. Got close, kind of backed off, and now we're just right back there. So we'll see. Gonna watch this Watch this area up here. See what happens. Um, Qs. I'm trying to see if we can make a push, make this as a running flat, and see if we can get a make a push toward the 600. So wave one down in two. So up in three, you got one, two, three, four, five. So you got five smaller waves here in three. Turn this thing into running flat, right at that 100%, 559.65. That's almost a textbook print right there. They got a huge pop yesterday off that low. So the three versus one off the low, 200 to 557. It could just, I mean, the only way we can make the case for this thing to go up from here is two things. Next week we have Nvidia. If Nvidia will do the work, I think this thing is gonna go. If Nvidia kind of not gonna run and kind of chopped around or whatever, I mean, the only other thing we can do is just simply turn this thing into some sort of a triangle. All this rotation kind of plays out, something like this, just to kind of chop around, you know. So we'll see what happens. So we'll see what happens. Just to give fourth wave a little bit more time, um, and then um, until the rotation and stuff kind of improves, and to see if I can get one more pushback to the upside. So that's the cues. It doesn't mean third we can put it here as well. So I mean, if you look at the price here, it just it's time to go. I mean, it's a sideways price action for now, unless something changes. But we'll see what happens. I mean, if we can just leave it like this as a running flat, then we can just look for five smaller waves to complete this fifth wave of the third, and or just to kind of go more sideways for some time. Then and then the rotation, if the rotation improves, then we can just look for a move back to the upside. Um, Tesla showing, you know, great signs for a breakout, but we don't. I'll take a shot. Don't. It's not going anywhere. I mean, um, we don't have a clear buy signal yet, so we'll see what happens on Monday. Something comes. I mean, if it's gonna be, it's gonna be on this bar, but we don't have it yet. Plus, it's still in this. I know that everybody is looking for this thing to break, and there's one thing that well, your upside confirmation is 348.98. Okay, you need to take out this high swing, the high of this swing right there. That will confirm this triangle is completed here. Either this thing can be completed here as well. On the wave count, I had them like this. So actually, I moved this D here. Come on, dude. It's so difficult to work on this damn cheap Thinkorswim charts. And then from here, what I have is one, two, three, four, five, and this three down here. So if this is a completed triangle here at this low, which I did it here. This is why I track two charts side by side, like two different charts. The reason why I do it is because one will confirm the other. You cannot have same exact chart. It's not how you, you know. See, I have the completed Y wave here. A lot of them would they put it here to see if they can get the breakout. I have this, which is fine, and I kept the other one like this on this side, you know. So one chart, anytime if it's gonna break, right? So it means, let's say if this wave count will play out like this, so that E was ended actually here. If the price managed to make another push back to the downside to complete something like this, so you got an A, B, C, D, and E. So if you're gonna go a little more like this, so you can just put an E right here, you know? So this is why I try always, I never keep all charts the same way, because you gotta you gotta know, okay, if this is my plan A, what is my plan B? You both cannot be wrong at the same time. It's nearly impossible. One is gonna be right for sure. Which one is going to play out, we're gonna find out. And then you just change this one once one when the one chart will confirm. That's why the both cannot be wrong at the same time, because they label different. So this is a very kind of advanced kind of technique you have to use. Um, if this is the low right here, which is at 297, so we have 5 up off this low and we have 3 down. So we have 8 swings here. So now from here, yesterday was right at 200, almost a textbook print right there, 3 versus 1. So we got 1, 2, 3, some sort of a 4, might get a little bit more push here to the upside, so anywhere this third ends, backs off somewhere here in the fifth, then get another push up in 1, 5 to complete 5 smaller waves. Then it will be due for some sort of a setback in 2. Now, here's the thing though, keep that thing in mind. If this range, okay, is gonna break, okay, it's not gonna give nobody any chance to get in. I can tell, I will tell you that for sure. Longer the sideways chop is, once it breaks, it's gonna break out hard. Okay. And Tesla is one of those stocks that once it runs, it runs. You know? So if I mean, you want to own shares or whatever you want to do, you can always add more or whatever the case is. It just, I mean, it was a pretty strong candle yesterday with the close. I mean, if we look at all the previous ones, like, you don't, I mean, this was a pretty decent one, but it's not as big as this one. You don't see this kind of a candle except for this one. That was a huge one. But you have to look at this, look at the close. The close was actually back here, still got left with a bit of a wick to the upside. But this is a very strong close yesterday, so it's looking pretty damn promising. But Tesla is Tesla, you never know. It's just gonna catch everybody up to the upside and just do another rug pull to the downside. And then it runs. So we'll see. We'll see what happens. We'll track it from here. Google, we already did. What else we have? Apple. Um, call it a 4. It can take a little bit more time. Um, it's the same thing. 5 up, 3 down, 3 versus 1. A little bit shy of 237. The high was 235.12. I've kind of backed off and we're just kind of like retesting this channel breakout. As you can see, it came a little close. Got a bit of a bounce yesterday because of the market pop. This fourth wave can take a little bit more time. The reason why being because this second wave right there was pretty big, against this five waves right here. So it could go a little bit more sideways, and then from there we can look for one more push back to the upside is to complete the fifth wave. So we'll have five completed waves, then we'll put one up here, and then then it's going to be due for a setback in three wave to the downside, and then we'll look for a third to the upside. So Apple will be fine in the next couple months. Um, so we'll see how this fourth one goes. Invalidation is 215. So you all know this fourth wave cannot dip below 215 of this high right there. So if that happens, then it means this entire wave count is wrong. I have to rework the whole thing off the lows to see what the heck is going on. So right now is just watch watch this zone and see how it managed to chew time to complete a fourth wave to see if we can get a push back toward this 235, and then we'll run fifth wave extension to the upside. Okay, diamonds, Papa Dow, um, five up to the upside. It's more like a diagonal. Got a huge overlap here, so we can easily do something like this. So you got one, two, three, four, five down and compose this three waves down, turn this thing into a red. And then from there you got one, two, up and three, four, and five. Three versus one at 450, right? Almost at the high, which was the prior high was 451. Took a little bit of a setback here in a three wave toward 23.6. And then from here, four versus three, and now back to the new highs, which is the higher high swing. So from here now, we can see if we can look for five smaller waves to take us back to the upside. So now if the price has finally managed to to break above this 451, which was what December 20 December high. Do this thing. And some of these bars are so December 4, December 4, 2024. Okay, so we are what in August of 2025 that we finally made a new all-time high. So when you taken out what 2000, okay, well, so that was December before Christmas, first week of 2024. So we're in August right now, and the 23rd after 8 months. I mean, call it 9 months. December 4th, almost the beginning. So call it after 9 months, the market finally, the price finally managed to break to a new highs. Oh, it has to make room to the upside because a lot of time the price came so close to this price came real close here. Look how many times it just in fake program market right like this. How many times it's got so close and then just backs off every single time. Now it managed to clear it yesterday. So the rotation looks pretty good on the value anyways. So it should be okay. I basically just has to make some room to the upside, just like this. Every breakout is just, I gotta spend some time, chop around sideways, whatever. Just gotta buy time and make some room to the upside. Dow's gonna hit 50,000. I don't know if you remember. I told you this thing last year as well. It's gonna hit 50,000. I don't know when, but it will. 47 now is pretty much is 477. It's the 1272 extension. So that's gonna be at least a minimum upside target. So we're just gonna leave it like this. Okay. So that one, two, three, four, and we'll look for a fifth wave to the upside just to complete one. And then we'll look for some sort of a second wave with the overall weakness in the market. Okay. Uh, I actually updated. I was up for a little while. I don't know if you ever guys ever go to a website. There's a little chart room there as well. If you go to this website here, a little chart room, you see I updated charts here as well. So it has full description here on each post. So that's the S&P. That's what I was doing this morning since 5 o'clock. It's like I'm trying to refresh, kind of update the site a little bit. It's starting to look a little bit old. Same thing, we just went over here. It's got daily chart here, same, we got resistance zone, FRZ, invalidation, major support, you got all description here. Got the Qs, I did this one. Some more room to the upside. Got a full description here. Got IWM, same thing here. One, two, one, two, three. So looking for this fifth wave. This sucker has to go right back to the highs. So we'll see if this thing goes. Then we got this one, just went over there. So these are all four major indices, that we have here on the site. So this one has all full description here as well. Okay. I'll see if I do um some sectors and stuff. See if we can do this one, run a little small blog here. This is a little bigger time frame. Like this is a daily time frame. It's not gonna get changed in a matter of a week or two anyway. So we'll see. So you can always check out the blog. Okay. Um a Palantir. Those CEOs are dumping shares. Heavy, huh? Um, I never follow this stuff. Okay, you can do this. Okay, the low right here is $5.84. Okay. You count five waves to the upside, down in two, right? So that's your two versus one. And then from here, you're looking for a third wave. So if you go up in one, that's a diagonal up in one. So you got a motive diagonal here, down in three, toward the prior fourth wave support, which is the 50% retracement. And then from here, you got a third wave to the upside. So you got a third here, and then you got a three-wave pullback down in fourth wave, and that's your fifth wave. The fifth wave, the three versus one extension, which is at 173. The high was 190. Okay. I don't know that yet. I mean, it can make the bottom line is that once you have I've told you this thing many, many times before. When you have a diagonal in wave one, you get the extended fifth wave. Okay? 99% of the time. I can be wrong at 1%, but 99% of the time it's gonna have an extended fifth wave. Okay? So cannot really, I mean, this weakness, yes, it shows, but it has to come down a little bit more toward this to make the case of the fourth wave. If not, we can just simply leave this fifth wave as is, you know? The swing is down, it has a sell signal, so there's no point to look anything up right now in the stock. Okay, so we're just simply gonna mark this high right there and leave it. Okay, there's no point to run to look up. Okay, when the direction of the swing is down, right? You're just wasting your time for no reason. So as long as the swing is down and as long as the sell signal is in, you can make the case of for stock to pull back. The major support for this stock is going to be the 125. Okay. You have a 190, which is the high. 125 is this prior high. Why? Because this is where it has the previous largest percentage decline. Okay. Which was 47.27%. So I mean, this area right there, it has to hold. Okay. This fourth wave right there, I don't think cannot really make the case for this fourth wave yet because you see this second wave was 28.45. That's 32. It's a little bit more like a choppy little complex. This fourth wave is going to take a lot of time. I wouldn't do this yet, to be honest. I would just leave this one as is for now, just to we could go back here to see if we could make a case of a smaller fourth wave instead of this fourth. Go on a side here. So we can leave the 190, we can leave the 120, but this is the bracket that the the zone that we're gonna focus on. We're gonna worry about anything else. Just two. So we can make a case here of a fourth wave. What are we gonna do? Jeez, got so much price overlap here. If we do this, yes, B versus one, that's 4 versus 2. This makes this makes sense. Diagonal here. Come on, mouse, work with me today. It's not a diagonal. Overlap. Which, so if you're gonna put a 1, 2, 3, 4, now you already had an overlap here with 4. Smaller arrays are always gonna be a challenge to count. Only because this is as this is one you think. If they're dumping shares, man, I don't know. This could be all of three. That's it. It's the only thing I can. The valuation of this company is so damn high. It's crazy. People are making a case of $40 on this stock. I would I would fill this gap right there. Um, I would because if this to me, it's like a completed five-way move, you know, by doing this. I mean, it's just a matter of how is this fourth wave will breathe. Twist right there, just fine. How much? 25. See, it's coming close. 32. So this 25, hang on for a second. 13, 15, yeah, 9 and 10. You see, this is the largest percentage decline off this low of 65. Yeah, this thing is this pretty much done, I would say, for now. Doesn't mean it's not gonna run back up. It will. But I think it just has to take a breather. This is the largest percentage decline off this low of 65. If that happens, there's a very big chance this is gonna just go either sideways or it's just gonna consolidate here for some time into this fourth wave. Yeah, you don't want to have that big of a retracement off the high against your previous waves. So back to this, just be around 135. I would just leave. That would be the best case right now.
Mo, is there time fibs that would give us an indication on where the fourth might settle?
You with your time, man. 100,
Yeah, thank you.
100% is right there at 11, November 11.
Cool.
So,
Thank you.
uh, so it's gonna put it right there. I think it's black. Yeah, November 11. But here's the thing. I mean, you guys have to bug me, but I do. Instead of looking at this, just focus here. You got a sell signal here at 185, which triggered on 814 on the daily bar, right? So it triggered actually on the 15th, the closing, then on the previous day. So it has a sell signal. So there's no point to look anything to the upside, period. Okay, when you got a sell signal right sitting on your head. So this is a sell signal triggered after a very long time, which was from that 65 that we just looked at. I mean, you see, this is the price right there, 65. So this decline that you have here is the largest percentage decline compared to all the you see the size of this swing compared to all the other ones. Look, all the red ones. Not the green ones are going up, red ones are down. It's the biggest one. So uh, it's sitting right there at that 50 at 154, closed at what 158. So plus on top of it, they're dumping shares as well. So we'll see if it most likely, I mean, if you had the initial swing down here, it could go like this. It could take another down like, then you can make a case like this. If that happens, that would confirm that fourth wave. So you can just expect some sort of a stock to take a breather. Yeah, there's no point to look anything up here anyways until this clears, So you need to until the price makes a higher high to break above 189.46, then we'll make the case to the upside. But I would watch this, which is this where the 50 and this fib zone here. And we'll see. The month is ending anyway, so we'll see.
Mo,
Plus the rotation is weakening as well. Hang on. Stay with the rotation. I know the stock is in a 10th decile. Yeah, there you go. Yeah, this thing is coming down hard. So yeah, there's nothing to look to the upside there. Yeah.
More going back to your Gann chart, the with the buy signal.
Mm,
This is another example back in March, April of that trickery with the buy signals and then kind of breaking below it in April.
hmm
So I know we're using this. Can you make a comment about how much room to give when like the stock like in April goes below the stop loss and then kind of bounces back? Because
Yeah,
we'll be
because you
having
know
some
what?
trades like that. Yeah.
It doesn't happen that often. I can show you 100 different charts, right? Now let's see. Let's do the big names, right? This is fine. Not from here because this is for this sell signal. See, like if you look at Tesla, you know, Tesla is fine. Now you look at the recent ones. You see sell here against this stop, buy here. This is a zig. This is the call I call a mean reversion. Look for a zigzag pattern reversal. This one here. So now if you look at a bunch of stocks, has Meta right there. You see all the price, even this one. Look how close it got, probably like off by pennies, and look at the swing that it took to the downside over time. So you can get real close. There, I there's a lot of times like some of these stocks is just where these market makers will run stops to the downside, and then they will rip them. You know, like here you go. Like look at this Home Depot right there. You see, went all the way down here below this line, as you can see. No sell signal, nothing, and then we'll just gotta rally all the way back up. So it happens. You see right here, these were clean. These are clean cuts buy and sell signals right there. So there are few names that you will kind of there's the John Deere right there. You see, these are clear, like clean um, reads to the upside. Look at this right here. Buy here, stop everyone out, look at the rip to the upside. You have to understand one thing, okay? You have to always look at the overall trend. Where you buying and what you can expect, you know. I have everything labeled here, but it's just a matter of like, okay, are you willing to hold that stock? So if you have a different approach or a mindset thinking like, hey, I like this company, I got myself a cheaper entry, I'm buying shares, and I'm going to be in for the long haul. If you doing that trade, then you can always add more on the next one down, you know? See the because you have to look at this way. Look at the decline from here. Okay, from 461, that's a sell signal right there, right? All the way down here. So when something is gonna trigger here, this where you actually doing a bottom picking, right? It's not gonna be just a clear cut straight shot, like okay, this is the bottom, I got in, and boom, it just goes up, you know? They're gonna shake out those lows, you know, a few times just to, and then it goes. And look at this move here, you know, but you still fighting this prior swing that has such a huge decline. So every time when look, I see a lot of signals, okay, because I have almost 100 charts. So I'm gonna find plenty of them, but I don't jump on them whatever I see. Like, oh yeah, I want to buy this one. First, it's too much risk. Second, I don't want to open like sit on like seven, eight, nine different signals all at one shot. It's just it's a pain in the ass to manage that kind of risk. You know, I put $2,000 in 10 positions. I'm like, you know, it's like 20 grand on you know like on $100,000 account. I'm like, I'm really running 10 positions all at one shot, especially in options. I much rather just buy shares. You know, at least I don't have a time decay. I don't have, you know, volatility to fight. I can just have let the thing breathe as long as it, you know, as long as it takes. So I always pay attention to it to see what the actual overall trend is. Where does you know, where the signal triggered? When was the last signal triggered? Okay. And I always pay attention to those things. And then as soon as I'm gonna that, you know, if a signal triggers, you go right up here to see like, okay, what is the expected ATR move that I would expect if the price pops to the upside? Okay, the expected move is 8 points, right? So you got a buy signal off the low. You got all excited, like, wow, this is it could be a bottom. We don't know that, but it has a buy. We act based on what? Based on RRG. We need that confirmation first for me to pull a trigger, right? I have a full process that works. It's just the way the system is designed. RRG comes first, the scan comes from there. We look for momentum, we look for alpha, and then from there we look for signal. If those lines up all together, I'm going to open the trade. If I'm off on RRG and if I have a buy signal here, I don't take them. I don't care. Why would I fight a buy signal if I don't even have a momentum or any kind of a alpha? If a stock is literally sitting right here at the benchmark, okay, like here in this circle right here, what kind of alpha or momentum that I'm fighting here on a buy signal? It's gonna be very choppy trade. I know that, you know. So I want to be like stocks like these. You see, like they're taking such a wide rotation, or the one they're gonna take the bigger hit to the downside. You have this screen right there is confirming that thing right to you that this is what you will expect. If you're gonna have a weakness, it's gonna have a huge weakness to the downside. So I have this does all the work. So I'm not interested in this part right here. Okay. These are very tough to fight. this this window right here. I mean, it's not like that these stocks cannot move. They do. Look, okay, here's JPM, right? Look where the JPM is. Let me show you a chart. Look at that. Look what this stock is doing. Why is that? It's because of this. Closer the stock will sit to the center of the benchmark, the stock is going to have, it just has no alpha. The trade is not going to move. It's just going to chop around. And this is exactly what it's been doing. Look how many days. 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16 days. So it's almost what? 3 weeks? So, 4, 4, 8, 12. Yeah, over 3 weeks. For 3 weeks. Now imagine that if you go out, buy a 30 days options, you toast. You literally toast. Stock is just sitting in a 5-point ATR range and it's been chopping around back and forth. So I know what to look for. I know how to find trades that I'm going to find, I mean, tons and tons of trade. I'm not worried about that part at all, but it takes time to find it. That's why we focus on this thing. This is the most important thing right here. So we go here in the 10th decile. They are calculated here by the distance, meaning that these are the stocks, only these stocks are the ones that are the further away from the benchmark. So meaning that the stocks, now look at this one, INTU, bet you probably took the biggest hit to the downside. There you go. You see, because it is sitting on the 10th decile, meaning that it's further away from the benchmark. So any negative news, it could go to the upside as well. There's the direction of the stock is not confirmed. RG doesn't give you that. The relative rotation graph is not going to give you the confirmation. Yeah, it's going to be bullish. It's going to be to the upside. The point is like the stock is the stock is in the lagging quadrant, is in a 10th decile. So any negative news or whatever is going to happen is going to take the biggest hit to the downside. So in the 10th, we have IBM, we have Eli Lilly, we have ACN, and we have UNH. Why you think that I open ACN and IWM trades? I open it for a reason, right? So that's the plan behind every trade, is to find, because we want to be in a trade that trade actually moves, right? So we have ACN that we did, and I still got a half in there. See the move? So this kind of a buy signals are the best, are the good ones. I always show you the RRG on every open position, and anytime we open a new position, I will add the ticker there, because I have this folder right here, open position. It only tracks what we have open. So if I close something, I'll just simply go right there. I'm just gonna delete them. I can just take them off. Now it's gone. When I put it back up, comes right back up. So this one I can watch on a real time when the market opens at the bell, because it moves on the real time. It updates. So I just keep an eye on them. So I mean, this is how we just, opening a trade is fine. I mean, the biggest challenge is always about managing the risk. So yeah, we define our trade. Okay, buy signal triggered. Rotation looks good, especially on the 10th decile, right? So we have a great momentum and we have the really good alpha. So we have a buy signal. We set a stop loss over there. So the trade is ready. Take a shot.
Mo, could you use this opportunity again to educate about your symbols up top, what each one you're looking at and what they mean, how to interpret the numbers up top?
The labels,
Yes, the green, the reds, the MTR, all that stuff. Which ones to pay attention to when you post a chart?
I mean, when I structure a trade, I already have everything figured out. But if you just want to look at like, okay, how the month is going for a stock, you can say like, okay, the month is down, right? The month is down, meaning that it has taken out, it took out the last month low, right? So the monthly, on a monthly time frame, you don't, we'll look in a daily time frame, but the month has a lower bar. Okay, so that's one thing. If the current week has a higher weekly bar, meaning if it takes out the last week high, then it means the week is up, right? Same thing with the day up or down. Up meaning like if it takes out the previous day high, it's going to be up. If it's going to take out the previous day low, it's going to be low. If it takes out the high and low, it will engulf. You know, we call it like an outside bar. Implied volatility, it shows the current implied volatility on a stock with the option, which is almost at 30 right now, right? It has a morning star yesterday. A morning star is one of the bullish candle setup. You know, we have a hammer, we have a bullish engulfing candle, and we have morning star. These are the three strong candle bullish pattern on a daily time frame. Okay, so this is the morning star candle at the close yesterday. The 5 EMA, okay, is sitting at 5254. You don't see it here because I don't want to clutter the chart. So that's why I kept the label up on the top right there. This way the chart looks clean, easy to read. You know, I mean, I don't want to, it has tons and tons of indicators and stuff working. Not indicator like stuff is working behind the screen. I just don't want to plot them on a chart because it's gonna be very messy, you know. I want to keep them clean. I want to know what the swing low was, where the previous swing high was. This is a lower low. I mean, we have 50 EMA, which is right there, this little orange line right there. And then we have a 200. 200 is this one right there, the blue one, the white one. So so the print is what is that? 273.15 and 308.53 is the 200 EMA print. DTR, ATR. ATR is the average true range. So the expected move, okay, on the average is 6 points, right? DTR is the daily true range, is the move that the stock has made during the day for the session. Yesterday, the ATR, the expected move was 6.37. It went up to 7.69, but it closed at 5.23, as you can see right there. So it reached above the 100. As soon as it's going to reach the ATR above 100, is going to this entire label is going to turn red because it went up to 121%, okay, of this expected move ATR. So if it's going to stay below, it's going to just stay orange. So meaning that it has not completed the expected move if the stock makes a higher high for the day. So you still have 6.5 hours to go. So when you try to structure a trade, you're trying to catch minimum 6 points. Okay. A stock can move 12 points. Yes, it can make the move of 12 points during the day, but and after a couple hours, it's going to come right back to the six points. Okay, because it went almost 200% move. Okay, on based on the average. So it's a very important number you gotta watch. Okay, on the chart. Look for expected move. You should have ATR on every. You can pull up. I don't know if you guys, some of you have Trading View, whatever you guys watch. Go to the settings, whatever the tools up on the top, and just type ATR, and just is gonna pull up the ATR for you on the bottom. So just keep that one on the chart all the time. At least it gives you the average true range. This is not like a standard deviations and stuff. Those are different. Those are from the mean. But the ATR is gonna give you a pretty good idea of like, okay, if you open a trade here at 260, okay, what was the APR 6 point will be 266. So there's no point for you to look at 308 or up here because you know that we have 50, we have 200 to clear before we can make the big case for that. And overall stock has been nothing but a deadbeat to the downside. RSI 5 is the daily read right now. RSI is a 75. I've watched 5 period. I don't do 14. I hate RSI 14. Okay. It's one of the most lagging relative uh, index strength on the time. You want quick turnarounds and stuff. 5 is excellent way to trade. RSI, not 14. Takes too long. We don't want to sit around for weeks over a month. This is just a confirmed swing. That's just it confirms the swing because it just measured points. So you don't have to worry about that part. Um, Year to date, stock is down right now is 26%. I just had this one. I had them removed before, then I put it back in just to kind of see what the stock is doing overall. Month to date right now is down 2.95. For the quarter right now is down 13.27%. So that's this. So the most common things what you're looking for is a signal, a stop loss, 50, 200 moving average. These are the most important things you have to keep an eye on. And then whatever the current price is against the stop right there, and you just look for an ATR move. It will be my first expected move if the trade will move to the upside, right? It's the same thing if the price will come right back down. So if the price does come back down, so I will expect at least 6-7 points minimum. So can it go to 10? Can it go to 11 points? So if it does, it will bounce by the time that it will, by the time when the market will close. So it will come close to it, and just like yesterday it went up 7.69, but it closed at 5.23. So it'll come close. Now we can go look at Tesla. Tesla was 12.61, went up 20.56, was 163% move against DTR and ATR, you know? So where is it closed? 19.90, which is, well, almost at the high. So it went up almost 163. RSI right now is 65, right? Year to date is still down. Now the stock is above 550 and 200. So technically, the stock definitely is looking pretty bullish. There's no doubt. Okay. So, in we'll see how it looks on Monday and stuff, and then we'll see if we could. We have this wave count anyways watching, so we'll see what happens. So implied volatility is very high. So you buying single calls and stuff, yeah, you're gonna pay a pretty big price. So your best bet is to buy time, open, go with more, go with a spread. You can do either a diagonal spread. Okay, those are the best way to not to get killed on implied volatility. You can do a diagonal spread. You can kind of make it a little bit more bullish. You can do a butterfly. Butterfly is always the best one. You can do a butterfly or anything. Like if you buy a single call, yeah, you're paying for it. So it's a simple way to keep things clean, efficient. Follow this from one screen, and then hunt for those. So I have, I mostly track 50 most of the time. I can go up to 100, then it will pull up a little bit more. But the point is like I'm not jumping on like UNH right there. You see the move that the United had, right? We all know. There you go. The RG will confirm that, okay? That once the stock will, we have a signal and RRG will give you that confirmation for sure if the stock is going to take a big hit or the stock is going to pop pretty big. Because what we're looking for is I don't want to be in a deadbeat stock. I want to be in a stock that moves, you know? So everything has to line up for me to put money on the board. If it's not, then I'm just going to sit back and wait. It's just, uh, it's a rotation that is going to see how it plays out with the trade. It's in the end is all probability game. Now, if we go to a ninth decile, so we have Palantir, CRM, now Apple is here, and we have Texas Instrument. These are the only these stocks are in that sitting in the ninth one. So Apple, we already looked at them right there, starting to pull back in the fourth wave. So we have CRM and we have ServiceNow are the ones there are starting to look. So we can go here to CRM had a buy signal here, made it up here. It has what? 6.15 ATR. Yesterday was 5.42% move. Okay, 88%. RSI is at 67.27, getting a little close to 70 mark. It is only above 5, but it's below 50 and 200. So you see, it got some work to do because look at the stock, how it's coming down. You trying to pick something. This is why when I trade something, especially off the low and stuff, if I could get like an expected move, if I get lucky with a couple more points, I'm gonna lock some gains right away on a trade because I'm fighting this whole drawdown for so many months. You have to keep that thing in mind. If you are interested in say like, well, it's a great company, I can see a good potential, whatever. If you have that mindset, okay, you can just simply buy shares. Then you can just let that thing ride as long as it can, So you can do that way. But for me, for swing trading, these are the things that I look for. I got few zones here. You have to understand this that you're fighting such a massive downside. And on top of it, where the price is sitting well above 50 and 200. Price didn't even come close to it yet. It can, but that's what the trade is to see that we can go and hug one of these lines first. Then it has to fight those lines, these numbers, to get a daily close above it to see like, okay, yes, now the stock is starting to get into an uptrend. Right now, this is not an uptrend. This is could be a dead cat bounce. It can just go right there, go right back down like this, because the overall trend is just the downside. It's not to the upside.
Yeah. Looks very
Yeah,
similar to Adobe, doesn't it?
correct. Yeah, these software names are toast, man. All of these stocks since last year, like every earning calls they're coming, like, oh, the AI, we're doing this to the AI, this, and none of these companies have nothing to prove. Not a single one of these companies has anything to prove about this AI. Name me one. These software companies are literally a joke. They had their business. They just like the main. Well, I see this one is called the bug right there. This is the one that tracks all the cybersecurity stocks. This is the ETF, the Global X Cybersecurity ETF is called BUG, B-U-G. Okay. As a matter of fact, this one has a buy signal. So it looks good. The issue that I have, I know there's some, I did a little bit more research. I go back to the, let's see, this 1500 index has all the industries right here. Okay. So you can see exactly which sector is trying to perform, what the story is. You see right here, software and services. Look at that. These names are gonna improve. Okay. Um, they're starting to show signs, because some of these, especially these bigger companies, but like, like CRM, because it's a Dow 30 stock. So these are the companies when they turn around a little bit fast because these are the ones that has to do the work for the ETF, especially the bigger names once they are on the top, right? You don't want to do like those Okta stock or those small ones like hardly have any market cap. You want to focus on the big names. Big names are the ones that are gonna drive the sector up, right? So they always gonna recover fast because they're gonna pump the ETF up. So the rotation is definitely weak. I'm watching this, okay, every day. I'm trying to see if we can make that curve. Once we'll make the curve, then we'll pick a couple more names and the software names and see which one looks good. So I got the ACN Accenture. So the only reason I got that one was showing you all of these, what I do all day. I got that one is because of the 10th decile. So where the heck it went? 50. So because it's right there, this is why I'm like, okay, I'll swing ACN, which I already paid, which is fine. This is trade is already up. I can close it when I made money on them. And then it's a matter now how the IBM is going to play out, which I just opened the other day. Okay. So I'm always more interested here on the 10th, 9th, 8th. Okay. This one right there. These are the ones the stocks are going to move. Okay. Abby is doing good. Very choppy move is making, but it's grinding. Got a seventh decile right there. We have Adobe. Okay, we have VFC. Now, if you look at any of these stocks, Google is, I'm watching, that's why the sell signal triggered the other day, and now it's cleared. It might make one more push or so to the upside. Google looks good because of the news that are coming up. So Google is definitely is weakening, starting to show some weakness. I got the sell signal here, and then yesterday we got the massive push to the upside. We took this, the high of the swing right there, which is fine. Still got shares, so I'm just see any upside. I'm not gonna miss them. Just not gonna. I'm not gonna get paid on those leaps, but I can, take advantage of any upside that comes my way from here anyway, so which is fine. So well, I'm just gonna watch if this one is failed, which is fine. Now the price is making new high, and now we'll see with after Apple and stuff how the price will what Google does on Monday. So sixth right there is good. It's got a kitty cat here. Got XOM. And what was it? Ruben was saying got a big pop right there. Look at XOM. Yeah, there you go. Got a news. Got a big 2 points. Above 550 and 200. It's a good sign. So choppy, man. It's just such a sideways stock. Yeah. Connect these two lows. We'll see. This one has a down month. A month is going to be ending in next week anyways. So next week? Yeah. Yeah, next Friday is the last day of the month. So I think then we have what, Labor Day? When is Labor Day? Yeah, Labor Day is September 1st. So it's going to be a long weekend. Yay, good. So we have 1 week. Next week, next Friday is going to be end of the month. And then September 2nd, Labor Day is going to be market closed. So these are the stocks that, you know, we just hunt for trades. I mean, if on
Mo, could you look at ISRG? You just showed that. It's a Da Vinci robot stock.
now you look at these, yeah, take a look. Look at this one. This is first decile because I calculated this thing everything by the distance. You see all the distances, these numbers are 3.5 ratio, 3.7. So they're all there. Now, if you look at these ones, look at GS, it's a little bit more than, see, it's just, it's been chopping around. I mean, this stock moves on average of almost 15 points. That's, but look at that. I mean, it's crazy. So, look, I know it's the most difficult part about trading and about investing is holding a trade. This is where most of people, sometimes I do it as well, but I'm a very well patient. I tried my best to be just stay patient and just not to babysit these candles. Watching every session, like, oh, one down session is like, is oh, I mean, that's it. You have like 10 different thoughts in your head right away. Like, I ended the day down. Okay, what is down, is not closed. I don't, you don't count any trade until it's officially closed. There's how many times you had I mean, I know it doesn't happen that often. How many times that happens like the trade is down almost $1,000 and then it's end up being break even? I mean, I know the chances are very low, but if you have enough time and if the setup is right, trade can turn around. But the only way it's going to turn around if you're going to get the green light from the RRG, you know? So yes, this thing right there looks beautiful. There's no doubt. Nobody knows the thing is going to go this far. Number one. That is the number one thing. Nobody knows that thing is that the stock will run this wild since 474 price. But the thing is, like, you go up here, you give back, you gain, you're giving back. You see, these are the drawdowns that you have to, if you're willing to hold, okay? All these down bars, that's when the sessions were down, these were the lower bars, is the game here. That you just, if you can master this, say like, okay, you know what? I'm in until I'm gonna get killed. Not like I'm gonna get stopped out, or I'm just gonna ride this thing. Ride it and just be patient. Yes, you're gonna have there's a lot of times there. I have trades open. They're up like $700, $800. I'm gonna end the day, and then tomorrow they're down like 400 bucks. Right away, I'm gonna think in my head like, man, why I'm so stupid that I didn't take $800 yesterday. It was right in front of me. I should have closed it yesterday with 800, and now I'm down 400 bucks. Now I'm only up $400. I would have. How many times that happens? Well, it happens a lot. So people's portfolios that they've been working for so many years, like I'm talking about people who are holding stocks, you think they don't see those fluctuations in their positions moving up and down? It happens. It happens to every one of us. But that means like a one down session or a two down session or a down week, if you have such a low entry on a stock that you've been riding it for like over a year, year and a half, or 2 years, that you're just gonna simply just gonna close a position. Once you close a position, you're out. You ain't gonna get that kind of an entry ever again. I mean, you could if the stock is gonna crash back down to that same number, but you ain't gonna pick up that same entry again. Some of these signals has so much potential. It doesn't mean that you gotta have to hit 50 in a row. You just need few good runs. If you able to ride those ones up, you can boost your capital like you're not gonna even believe it. You just I'm only talking about a strong stocks, like companies that are strong, fundamentally, strong balance sheets and things like this. Some of these entries are can just as a massive pop to your capital, but you don't need 50 of them. You just need only a few good runs. You know, can you can see a very big difference. Again, in the end, it's just all about. I make mistakes as well. Don't worry. I mean, don't. I'm not saying I'm the Mr. Perfect guy. I rush things as well. It's just okay. It's like I'm swinging trades. I need money as well. On a shorter time frame, I was like, okay, I'll give a couple days and see how the trade plays out, and I'm just gonna close it. The Some of these trades. Look at this MetLife. We traded this one. Look where the stock is now. I made like 300 bucks. Could have made how much more? Still valid. Look at this. We traded this one, raw stores. It's a good trade. I'm not gonna complain. I made like almost $1,800 on my wife's account, over 3 grand on my account. It's a great trade. But look where the stock is right now. I would have made like almost 10 grand on this trade. Still valid. You have to ask yourself a question. Do you have the patience to hold the trade? Can you handle this? Like you enter a trade, you got excited, you're making money, and you're just gonna go negative. The only thing, can you handle this? Yes, it can trigger, it can get you out. But look where it is right now. Well, this is what they call we trade with a plan. I enter the I enter the stock. Why? Because of the RG. Why? Because of the momentum, because of the alpha. I got the trade in, played out, I cashed it out. But the thing is, like, did I rushed into it? I should have left at least like a runner or something. Yeah, I would have. That's what I thought as well. It's like I should at least leave a runner. I hate to exit the entire position all at one shot. Because once you're out, you're out. Leave at least a runner. The same spread that you're trying to play to the upside, the suckers are just gonna max out the spread for you. The worst case is what? The thing is gonna reverse back on you, but you still made money overall on a trade. You had multiple number of contracts. You just leave it, you just hold in a runner. You can leave one or two. Depends how you size the trade. You have 5 contracts, you have 6 contracts, you close 5, leave the one. If you have 10 contracts, close 8, leave 2 of them. Leave something. You don't like. I know sometimes I kind of kick myself as like, why did I exit the entire damn thing? Should have just at least hold one or two, It's still going. You don't even know. It could be here in a couple days. I'm not. You have to understand one thing that not every signal will be perfect. Okay, there's no such a thing exist in this world. But I'm pretty damn sure that most of them will win. Why? Because it's my experience and I know how it works. We review trades. If I get stopped out on one or two, fine. As long as I can win 5, 6 trades against it, I'm good. I'm still a winner. I'm still winning 5 against 2, losing against 2. You're still walking away with money. Now, if you trade anything else beside it on your own, oh, I'm not responsible for those. If you have your own trades are going on the side and then you want to throw mine on top of it, I wouldn't do that. Keep it separate, you know? That would be the best way to do it. Don't mix everything up. I understand everybody love to trade, okay? I do some trades on my own as well. I run my brother's account totally separate, okay? He, um, I manage his trades, but I don't open any option trades on his retirement account. I strictly told him, it's like no options. You want to grow your account? I'll help you grow it, but it will be only with shares. So he has enough capital in there, and I just buy shares. 30 shares here, 40 here, 50 here, 75 here. Set the same stop loss on them and let that thing run. So I do it with shares. This account is up like over almost 8 grand now in 3 months. Just by doing these ones. No options though. You don't trade option a retirement account. Are you kidding me? That's a high risk. You're gonna take, crazy losses. Shares are much easier. Pay the price, set the stop loss on it, pick the number of contracts, shares that you want to buy, and just let the thing work. It just, we'll see. I brought this one up is because it helps me not to sit around on Elliott Wave all day long. Okay, because I hate doing that. I want to find trades for everyone. That's my number one focus every single day when the bell rings. I want to find trades. The finding trade, it takes time. I want to stay focused. Then I need to think how to structure a trade. Should I go with a butterfly? Should I go with the spread? Should I go with it? How long did it leap? Should I just buy shares? I need to look at all these things to see like which way I could deploy money into it. I can't just, signal fired. Yeah, I'm gonna grab 128 calls. Then okay, I'm gonna buy 30 days. Yeah, these I can't do these kind of a things. You just have to look at everything. What are you? Where are you putting money in? Then set alerts and stuff and just leave it. Don't even look at them. Let the thing work. I think, I mean, since I brought this thing up, um, I think you should. I mean, some of you guys have been sending me DMs. Think you've been doing pretty good. Um, I hope you're going doing okay. But if you are trading these trades, along with your trades on top of it, I would highly, highly recommend you to open a separate account. Don't merge them. Your trades are separate. I don't know how you open them, what you were thinking, and what you're like. I don't know that. I don't know none of that stuff, and I don't want to know it either. Okay, you were in love with the company or whatever the case was that you bought something, and but on top of it, now you throw in my trades. You're gonna have a mixed bag. Open up a $10,000, $15,000 account, get the margin on them, and just keep the trades separate. This way you will know, like, okay, I took Mo's trade. He's in. I'm in with him. He paid this, and I paid the same, this whatever the price is. And I manage it. I close. I'll notify you everything like, hey, we closed the trade, and that's it. This way, at least that account that you will strictly trade what I trade. I mean, when I have trade open, I'm watching. I don't watch the P&L. I watch the chart. So when I'm watching a chart, I'm like, this is a daily chart. Like, okay, well, if the stock can move 2, 3, 4 points, well, why do I have to go back and look at the P&L? What my P&L is doing? I know what the delta that I took on a trade. I'm like, okay, I'm watching a trade. Okay, it looks fine. What it has a lower bar for the day. Well, we'll see how it closes. And give couple days to see how the trade plays out. And then if it reaches to whatever the resistance zone or whatever, that's where we'll see like, okay, hey, did we completed the ATR move? What's the overall DTR move? Can we lock some, whatever? I'll set those targets. I'll set the zones. I'll see like, okay, if the price will makes a higher swing, we would expect a resistance here. We should expect some, to book some profits. That's it. The best way to trade this to be I've mentioned this thing before as well is to split a trade in two, meaning to buy half shares and half option trade. That's the right way to trade this. This way you own the stock for a much lower entry. Look at 127 now is 150, right? You can close the option trade whenever you want, but you just hang on to those shares. I think you can build an excellent portfolio over the years by doing that. Some of these names you can pick right from the bottom up, and then you can just keep writing them. It's the same thing that I'm doing on Google right now. You're not going to see me closing Google shares. You see, I bought them here, the shares. So I have them. Now we're right here. But I've got the leaps as well. So now I have shares, but I close the leaps. So next sell is going to trigger, which is fine. Then I'm willing to give money back on the shares that I have, which is fine. But the next buy signal is going to trigger anywhere, okay, in the next week, whatever the case is, I'll roll another leaps. I'll just keep doing the same, but I'm going to hang on to that shares that I have here, right here. So you just hang on, and we're just going to keep rolling those leaps over and over again. Another buy comes in, something like this, go another leap, and then we just stay in there, stay on those leaps as long as we trigger with another sell signal. Dump those leaps, then wait another couple days, another week, 2 to 3 weeks. Whenever another buy signal is going to trigger, buy another leaps. That will keep just keep rolling those leaps over and over again per each signal. These signals on Google works really good, just to let you know. Meta, Google, they're very good. They're very liquid stocks, so they don't give you those stupid looking wicks. You know, I mean, anything can happen, but some of these are very clean, uh, you know, the very clean read on the on the price. And this is good, pretty good as well. Look, same thing here. You see, they run these stops to the wicks, boom, run them right. How far they run them back to the upside? Yeah, there's gonna be some stocks. I mean, if you're not comfortable, if you if you think that you just gonna got just clipped over a wick, you can take the previous bar low as a stop loss as well. You can do that as well if you want to. Okay, meaning let's say this one, right? So this low right there is the stop loss against this buy signal. So if you think that you're gonna get clipped over a wick, you can put a stop loss right there. It's not that far. Okay, anyone that you're gonna look, you just taking a previous day low right there. You see that triggered here. It gives you the stop rate to the previous day low. You can just use this one. So this way, at least if the wick comes, it takes out this low, and it doesn't really take out the actual swing low. So you could give another daily bar low as well. You can do it that way as well. I know it happens, okay, but it's just the way these damn market makers is gonna flush everything out again because we've been down. Now we're trying to come back up, but they're just gonna run those stops down again, and then they're gonna run it back up. It's just to flush everyone out. It happens, but if you go more into liquid stocks, you don't really see that happen. Like here's AMD. Triggered here, stop goes at previous day low. Sell signal here up on the top. Triggered here on 8:15. Stop goes on the previous day high of the 8:14 high right there. 8:14, there's a little red line. So if you that's the wick as well. As you can see, it's a huge wick. So instead of this, and then you see like, okay, the price is coming right back up, you could use this one. So you don't, it's not a huge gap between them. I set it up with one. You can use two if you want, if you think like I can leave a little bit more room for trade. I should have, I mean, what done is done. I should have done the same thing on the future, just to leave 10, 15, like 10 more extra point. But at the same time, you don't know that. What if that thing just, you know, stop you out at an extra 10 points? Then what? And then just, rip right back up. You don't know where these highs and lows are, man. It's just the this the game that we all fight every single day. Like right, this one right there is gonna get up. It's gonna get updated. This is failed. Look what Qualcomm did. Triggered a sell signal here against this high right there. Look at the wick yesterday. So we'll see what happens on Monday. I'll watch this one. You see, you got three bars. Okay, that confirms the swing is down. You have three bars, one, two, and three. Three lower bars. Now you gotta rip all the way back up to the previous swing high right there. That's the high of the swing. Now, if you look at the highs here, you see the window, look at this high of 818 and look at the high of 819. Yeah, I mean, I'm not gonna change anything or rewrite the entire damn thing again, but um, we just want to, if you ask me, I want to leave things the way it is. I'm not changing nothing. It well defined risk and everything per trade. One or two can bite me, that's fine. Not the end of the world. There's Oracle right there. There's some, if you look at some of these names, they're like, this one is good. I don't know what the heck happened here. Nvidia has a sell signal. against this high, so that's the one to watch. I got earnings coming up. 183 is the one to watch. Yeah, but the thing is, like, look at the run that Nvidia had since here. Look at this. Look how they look at this low. Look at this low of this bar on 421. And look how far it went. I'm not saying that like this kind of opportunity is not going to come again. Of course it will. We're going to get them. Okay. The next plunge in the market is it's gonna happen. Well, I don't know when it's gonna happen, but it will happen again, as all the previous 5%, 10% drawdowns that we had uh, since from the decades. It doesn't mean there's not gonna that we're not gonna have another one. Of course we will. But how when we gonna have it? Well, we take it day by day. That's the way to look at it. Can't sit and think like, oh, 10% drawdown is coming. Well, like, okay, well, make based on what? It's a Microsoft got a sell signal. There, I mean, yesterday, if you would ask me, okay, none of these Mag 7s, okay, showing the upside strength based on a buy signal. The only thing popped yesterday is a 1 hour charts. The Qs, the 1 hour chart that we traded, S&P, SPY, all these 1 hour chart that what happened was Thursday, the last 15 minutes of the close, okay? Because Jacksonville was yesterday, right? The last 15 minutes, because I have a right monitor here that is all 1 hour charts, pretty much every stock triggered a buy signal on a 1 hour chart across the board. S&P, SPY, IWM, I watch Russell, RUT, QQQ, Tesla, Nvidia, Apple, Microsoft, Netflix, Meta, Amazon, Google. Every single one of them, okay, triggered a buy signal 15 minutes before the close yesterday because I was watching them. I took the cues, right? So I took the cues. I was like, I don't know if I want to throw this much money over a 1 hour signal because daily signals all have all sell signal. That's what I was pretty kind of like, because many of you know I don't make calls, meaning like, oh, we're gonna go up tomorrow, we're gonna go. I don't do that. You never ever hear me saying these words. I don't sit and predict market moves. I trade what I have in front of me, and I'm going to show you exactly what we see together. But when I looking at everything here, and then at the same time, I'm like, I'm I'm sitting here and just like looking at these daily chart. I was like, down for 6 days. Last time we were down back in 2016 in November. I was like, we're gonna see some crazy massive pop tomorrow. That's how I said it because that's when I wrote it yesterday as well. It's like if you making a bull call, you know, I says like these are the ones that there's some I don't know where it went. The we do some crazy stuff here. That's okay. It's good to have some fun. Um, I was like, these are the ones gotta pop big right there. Bullish bets for tomorrow. 640 calls, 570, 226, and 429. These were all on a 1 hour bets that I'm willing to like, these are the ones to. I took this one. Should have imagined or taken a full photo of a movie. I have a crazy day yesterday, but it's okay. Trade is a trade. Doesn't mean that I'm not gonna get another one. It's very hard to predict big, huge pops, But if when you see signs, which I did, I was like, we're gonna. Well, I wasn't expecting a 1,000 point move yesterday on Dow. Dow moved 1,000 points in 15 minutes yesterday. Just to let you know, in 15 minutes, Dow had a 1,000 point move. Think about it for a second. In 15 minutes, 1,000 point move. Russell was freaking 4%. It's crazy, you know? It's just like wow. Over a one single rate cut. Think about it for a second. The whole sentiment, this guy, he was out in Wyoming walking around with Christine Lagarde and all the other central bank. Every one of them had cut their rate at least seven, eight, nine times, right? Bank of America, all these banks has already cut down their rates, right? We didn't. We're only negotiating and like trying to confirm only one single cut. And look what kind of a drama that this entire market is creating over a one single cut. It's all noise. That's what it is. They're just trying to bring that fear, as much as possible. That's what the capitalism is. Like, it's just to scare people. I mean, if you would ask me, like, if market can run this crazy, okay, on all-time high rates, and then we do actually cut rates, what do you think is going to happen? That's the only question that I have in my head. But at the same time, when you look at these rates, they're like, it's going to be by the time they will come and announce the rate, it's going to be fully baked in. There's no surprises because that's what Fed doesn't want to do. They don't they know they don't want to shake the market. Give the public the upfront information. Yeah, yes, this is the decision that we're gonna make. They already give them a hint a couple weeks in advance. And okay, now next month, um, the rate. Well, everybody knows. A kid will now tell you the same thing. Yeah, we're gonna have a rate cut. Then everybody was like, okay, well now we have to see like how the bond market is gonna react to it, how the treasury yields is gonna react to the rate cut, that kind of a thing. So there's always some, but you have to understand this at the same time. I was watching VIX. You're not gonna find. I had a hope was that well. It has a buy signal as well on the VIX, but look at the flush yesterday. It's wrong. I mean, it's gonna update on Monday. It's wrong. It doesn't have any. You don't. You cannot live. You cannot is label or do anything with VIX. It's no. It's almost impossible. But it can give you a bit of a pop hint, for volatility. And so look at this. Same buy. But you don't know the volatility is going to spike that much anyway. So just everything looks beautiful when it's already done. You have to always look at this way. But every time when something triggers here, this is all blank. There's nothing here. This is where we all gonna have to fight our lives. Either we're gonna go up or we're coming down. Yeah, everything it's all perfect, which has already been done. So we'll see. Apple. Sell signal. I mean, if we look at Mag 7, okay, yes, we had a huge pop yesterday. Okay, I'll show you one by one. Tesla, sell signal. Okay, let's go them one by one from here. Just to give you an idea of what we can make for the next week. Because all what I'd see is that all of these moves, all the huge pop that we had yesterday was all based on a 1 hour signal, not on a daily signal. All these daily signals have a sell on it, which is fine. Nvidia, sell. Apple has a sell. Microsoft has a sell. Amazon has a sell. Google cleared it yesterday because it popped. It had a sell as well. I know that. Meta, sell. Netflix, sell again. You see? That's how you are confirming the broadness weakness in a growth sector when you have all sell across the board. So let's see what happens on Monday and Tuesday, okay? Because they're very kind of hasn't really moved much except for Microsoft took a little bit of a leg down toward the 50 EMA at 501. But the rest of them are still okay. Here's Nvidia here, took a little bit of it, but not down, not as much. So the bigger picture here is all sell, as you can see on a Mag 7. But then what yesterday on an hourly chart is all pop was right there. Now we look at the hourly chart. Tesla, you see? Look from here, all these moves. What you're looking at, what the session that we had. Tesla, Nvidia, Apple. Very choppy. Microsoft didn't really move much because it took a bit of a beating. Then we had Amazon. See? All of these buy signals that you're looking at here, they were all triggered in the last 15 minutes of the close on Thursday. Okay. Then we have Google already went up. Same buy right there. Meta, buy. And then Netflix chopped and didn't really move much. Netflix is more like a hedge stock, meaning that, you know, um, yeah, it's more like it can't like um tariff like like this stock is never affected by any tariffs, right? This stock runs on any kind of like I'm not saying another pandemic is gonna happen, whatever. Like any kind of like people's gonna stay at home and watch movies. So it's just like entertainment. There's just hasn't doesn't have any kind of a negative effect from anywhere. They don't give anybody any more subscription number anyway, so there's going to be always a big, huge secret who's leaving and how many people they have. So yeah, before it was just a pure subscription business. As soon as they can announce that thing on earnings, stocks are going to either drop 100 points or it's going to pop 100 points. So they stopped doing them now. It's on earnings. So it's all about just the regular way to report earnings. It's the same way Amazon doesn't shows AWS numbers, but it doesn't show their Prime members, how many subscription, Amazon Prime members have, like how many members they have. But yeah, that's how they do it. So just the point is like everything yesterday is all based on a 1 hour. I play them but I don't play many of them. Just you know that. I mean, I took this one, QQQ, because well, first I know the swing is down. So this entire move that we had down to the downside from 583, I was like, okay, there's a sell. It took all this much beating. Here comes a buy. We're down for 6 days. Tomorrow is Jackson Hole. He cannot mess that thing up anyways because he's gonna piss, you know, Trump off. Trump is gonna start calling him stupid and a moron. So it's like he's gonna be a good boy. I just had a feeling that he's gonna, that's what I made the case. I was like, we should be fine tomorrow. And got the nice pop at the open. I mean, technically yesterday, this was an hourly bar, as you can see here. And look what we did the last 5 hours. One, two, three, four, five. Nothing. Because this was the trade of the day. That's it. If you either in, other than that, you just nothing here. It's a 1 hour chart. All you're gonna see is 6 bars for the whole day. You're done. This what the open was, 8:30 right there at the bottom, as you can see. So that's the hourly bar that opens, stretches all the way back up here. We booked profits right around here, right to this mark. And then from here, poked a little bit to the upside. Then you see, the last 5 hours is just the same thing, nothing. But I mean, doesn't mean the market is up almost 1,000 points. What do you think is going to go up 2,000 points? Look at the ATR move, 6.81, went up 10.72, 157 points, but it closed at 8.69. It's just move is done. You're not going 300% move. What are you out of your mind? I don't know. You guys, I don't know. I mean, you guys need to read Trading in the Zone book and Mark Douglas. Read that book over the weekend. I know some of you don't. I'm not trying to sell you something, but I'm just um this book. Read this book. It's gonna open your eyes. How you trade every single day. Get on Amazon. Get the audio version or whatever you want to read. You can always listen to it as well. I highly recommend you read this book. You're gonna start looking at trades, whatever you trade, whatever you own, way differently once you're gonna complete this book. Read it. I highly, highly recommend you. You're gonna start seeing trades only based on probabilities, nothing else. That's exactly you should be doing. Trading is only probability game. You have a weekend, you can easily finish it up over the weekend. Dude is good. It's Mark Douglas. It's a good man. 67 years old now. Okay. We're not gonna stay too long because I gotta take my car to a dealership for a first checkup. You know that with the 5,000. She doesn't even have 5,000. Like 3,500 miles left since last December. But it's time is either a 6 months or a 5,000 miles. So not an appointment set over there at that Lexus store. Have them check the car. IW, what do you want to do? You go over IW. Okay, go to the website, go to the chart room, and look at the chart. Wave count is over there. What do you want me to go over? What you,
I just want to hear your commentary.
huh?
I just want to hear your comments. Looking at the chart is
IWM
one
is,
thing, but
well, here's the daily chart, right? If you know, like, the thing is like all-time high is 244.98, as we can see here. Now, if you look at all the rest of the charts, same thing. I think IWM is going to do the same thing as well. He's just going to grind his way up like the rest of them. You know, it's the same dip that has been just all going up. The same thing here. See? Finally cleared this, like meaning the breakout. So diamond is now here's the thing. Look at this. Mean reversion to the upside. IWM doesn't even have a sell signal. It's a little mixed. I mean, I would be a little cautious. I want to chase growth. Don't get me wrong. Okay, and I will, but I'm gonna only attack these kind of stocks that comes actually here, fits the criteria. I don't want to jump on anything else that is moving. It's not the trade. The trade is these are the trades to look and to hunt, you know? So we had, I mean, I swung this one. That was There's some trades that I take them on a side. I'm not gonna lie, that's fine, but that's like everybody else does the same thing. It's not like I don't give enough trades to everyone either. So there's some trades that I take as well. So I close them and manage them that way, whatever the case is. We can expand this list. We can go up to 100. We can go to 200. I mean, it's gonna throw a lot more stock. Now it's gonna update it to 200 from 50. So we can always, I have the tools. I can expand searches. I can run deeper scans. It all comes down to like how much I want to trade, how much I'm willing to throw the risk on the board. And then again, the challenge is always going to be what? Managing these positions. So it's not, I don't want I always try not to trade too heavy. It's just not the way to do it. It's very, very hard to run 10 plus positions. Very difficult. Okay, now we're back to 200 mark. Change this back to 200. Not gonna see anything. There you go. Here goes your 200 stocks. So how are you gonna see anything? What is moving, where it is? I filter them. It's gonna do it for you. Here comes 19 stocks. They're in a 10th decile. FTNT, Team, MSTR, Snow, this, whatever, UPS, ACN, CMG, we already know. So this gonna pick those 50 that we already been before, but it adding an extra 150 on top of it. Okay. So you see those UNH and all, so those 50s are there. So we just, because the index is at 50, 100, 200, 500, 1,000, 1,500, 2,000. So I'll give you a here. Nasdaq 100, Russell 1000, Russell 2000, Russell 3000, mid cap index. No, sorry, micro cap. These are all your penny stocks and stuff, right? There are millions of market cap companies. They're all micro cap, more volatile. Russell mid cap, Russell top 50, Russell top 200, S&P 100, 400 mid cap, 500. Then these are all your sectors: communication, discretionary, consumer staple, energy, financial, healthcare, industrial, infotech index. These are going to be all tech stocks. We can do those as well. So it's just gonna get rid of everything else. It's gonna be purely tech stocks. Material, real estate sectors, indices, utilities, 600 small caps, S&P 1500, TX60. So this is all this how huge the damn market is. They're all here. Yeah, currencies, Dow Jones, transports, and FTSE 100, 250, 350, top 10 G10 currency pairs on the Forex side, global index, the whole world. You can see it here. So that's all here. So this all depends that how much you want to trade, what you can find, what looks good, what scans. Now, if we go back here, so the first thing that you get them is which are the one has the right RG with the right angle. It's not about this. We need the right angle as well. RG is not something that you're just gonna these things are swimming around on the screen in front of you that you're just gonna say like, oh, this one is going up. No, it has to fit a certain angle as well. Okay, there's a lot of things goes behind it. Airbnb, anything it says RG true, it means it has the right angle, which is heading northeast. That's why I talked about Airbnb. I didn't take it, okay, because now I'm not like, well, now I'm going to chase higher prices. Airbnb, let's go back here, right here, Airbnb. I ran a scan, yesterday, the other day. Remember I was talking about this? And that stock popped over, settled at 349. It was over, what was it yesterday move? 4.11. I looked at him yesterday. I was like, testing right here, that 50 EMA. 200 is right above it. This is going to be a very, for this stock to break now. Okay. This, this area right there. This is exactly where the 50 and 200 is sitting. What I like about this is, well, I hope it pulls back. We can get in. That would be a nice. We can ride this thing up. Um, but I mean, you have to look at this. That if we're gonna pay 130, we're gonna use 118. So our downside risk is getting bigger and bigger. You know, so we need to try to minimize this thing as little as possible because we need to come as close as possible to this print. It when well we had a move up since then. I didn't see it until it shows up on my scan because this is not an the S&P 100 stock because I mostly focus on 50 and 100 index. So now I expand this thing up to 200. I can go up to a S&P 500. It's gonna show a lot more stocks. It's just not. It's the point is that it's not like finding trade. I can find plenty of trades, but it has to click the checklist. You know, the checklist that I have is here. This checklist has to click. Number first thing, RG scanning. Okay, I wrote everything here. Then signal. Then we take the DT rules. How are we going to structure a trade? Time, time frame. What time that we're looking for? We're looking obviously for daily, which is going to be a swing trade, which is going to be 30 to 60 days out. What trade are we taking based on the implied volatility? Are we taking vertical pairs? Are we taking butterflies? Are we taking broken wing butterfly? Are we doing a calendar? Are we doing a diagonal? Then we take a risk management of 1 to 2% per trade. Max is 2%. I would never ever recommend you to go over 2% on any single trade. It doesn't matter what trade it is. You're not going to walk past the 2% threshold. Okay? If you're doing that, you're either too desperate or you're just going to get hurt really bad. Key to success, that's it. This is 7 points. 1, 2, 3, 4, 5, 6, 7. That's all it is. If you want to do the trade process, which is the same thing, just RG scan, signal, define risk, structure the trade, size up your position, how you want to do it. That's it. Let the thing work. This is the trading I wanted to do. Simple, clear to everyone. Keep the chart as clean as possible. Nothing floating around here on the top. Few information up on the top here. That's it. If I really don't want to use this one, I can just get rid of this 50 and I can even make the chart even more, more clean. Just buy here, define your risk here, take a swing. But there are hundreds of other stocks as well that it could have another buy there or whatever the case is, but I'm not gonna jump on them. I'm only interested in the ones that are gonna check mark my checklist. The system works. Okay, you have to give a little bit of time. It will work. You will see the difference. I'm trading. I trade every single day, as you guys all know that there's some days I don't trade. I just sit back and watch. You should do the same thing as well. And you just say like, okay, well, this is what I have working. Okay, now let's see what else I can find. Something is gonna come up Monday. If I'm not gonna find something by Tuesday, I'm gonna find something. I have scanners that I can run. It filters everything for me. I have everything set. I have Airbnb here. CrowdStrike is here. Okay. So we have two of them here in the ninth decile. That they're ones that should be, they have pretty much a right the angle. Um, so I think CrowdStrike has earnings. I don't know. Airbnb right there. These are the two hooks. They're next to each other. Then we have MCK right there. Mackinson, what is that company? Then we have JCI. This one, Johnson Control International, JCI, medical, whatever. And then we're gonna go back to the first decile. So we're gonna have the EW right there, Edward Lies. So I have to just go there to see like, okay, Airbnb is already there. You can see EW. Yeah, we had a mean reversion back here. It's already moved quite a bit. So it's hard to chase a trade that just already pushed so far, you know? So you just have to wait for it's very sloppy, pretty sloppy stock. But the point is like to hunt something here. ISRG, I'm gonna I take a swing at this one, but not anymore. I this one is see the wick right there? Same thing they did this week. They had a nice run. Look how they flushed everything down. Same wick. So we'll see what happens on Monday. This the rotation here on ISRG does look good. Look for some sort of a
But
advance.
your signal still said false, even though our directional
Correct.
vector looked good.
Yeah. You see, remember we just talked about this damn wick, you know? So we'll see how it looks on Monday.
Does
If
the directional vector update after the next day? Because
yeah,
if you look,
everything update like because everything is based on the close. And you have to let the candle close fully close. You have an open, you have a high, you have a low, and you have an open, and you have to wait for the close. Nothing will work in between. You don't want to take anything on a running candle. It could be in any minute, you know? Yeah, everything you have to have a bar. If you follow a bar or a body of a candle is going to have a high and a low and an open and a close. So the signals work. Any signal that you would ever come across will always work based on a close. You need to let the entire candle close based on the previous ones, and
I
then
think ISRG was on the eighth decile, I think, when you showed the RRG eighth. Yeah.
yeah, right there, eighth. Yeah, it looks good. It definitely looks good, but they see that what they did, they run those things. This was good back here, and it doesn't look that bad. I mean, it has the initial dip here, got a move here. I mean, you see if we could try to find some support. You see, draw some fibs from this high. Anyone use these? Yeah, see, it's right here between the 61 and 78. So we'll watch. I'll keep an eye on this one. This one is doesn't have much liquidity and options. I know it's been a long time for me to that I traded that stock. I think the last time I remember, it doesn't have a lot of liquidity and options. It's not a cheap stock either. So, so we gotta see. It is below 50 and 200 as well. See the 50 just crossed.
Yeah, please keep an eye on it for shares. I was thinking shares, like 10 or 20 shares.
Yeah, let me watch. Yeah, okay. Let me watch this one on Monday and see how it looks. Rest, I mean, I will fine. I mean, it doesn't. Here's app 11 here. Is that here? Okay, so this one is rotating out along with what is that? What is this? Arista in. Yeah, still an uptrend. Oh, it probably had that earning gap. It filled this gap. That's crazy. The stock closed here. Oh, funny price action here. So the stock closed on this day, gapped up to close this gap. So the gap got closed with another gap, made a new high above this high, and now is coming back down trying to fill this gap. Jeez. I never actually, I don't know if I remember, I never seen one gap actually like you fill the gap with another gap. It's weird. And then you making a new high and then you're coming back down trying to fill this gap. I don't know. They probably have earning gap or something. I don't know. It doesn't look bad at all. Let's see if the swing. Oh, the swing is down. Okay, I got a 10% drawdown so far. It's been a long time I traded this stock. Got a weave up at 115. It needs to hold this high right there. Got two closes already below it. It's not good. See, when you made a new high right there, you usually back test here, try to see if you can try to resume back up. You see, in this case right there, it already got two closes below this high. Oh, weave up is at 115 off this swing. You can run some fibs, use this 153. I mean, you can go on and on, whatever. And go to the weave up, well, that's gonna way down. Let's see what the swing count is. Okay, so setting back in a fourth swing now. Okay, should be fine. Pushing back in a fourth swing. It's actually a pretty good wave count as well. So can count them. It's a really nice, clean wave count. Here's your wave 1, 2, 3, 4, 5. That's your 1. Here's your 2. 1, 2, 3, 4, 5. That's your 3. Now you're looking for 4. That's your stop loss goes right there. Needs to find support here for a move higher. Okay, simple. Now what we can do here, let me see. Gee, I'm not gonna have this. We run this to this. We look for 4 versus 2. Now we clean up all the other ones. We needs to. So we have this. Then we run from. Then we run 4 versus 2. This one. Close everything else. There's so many of them. There you go. That's your zone right there for the fourth wave. Take this. That's your fourth wave should settle right here. That's exactly what the number is set anyways. There you go. That's your zone right there for the fourth wave. From here, the stock should look for a fifth wave back to the upside. So where does the fifth wave goes? You can just simply see what it shows here. $153, so you can target 153. I read this. Take a 127. Then you can take the P out as well. Yeah, 120. I don't know it's gonna come back down that fast because of the earning gap. This is to watch. This target back to the upside can do a channel, connect 1 to 3, projected from this low, not from this low, this low. This is where the swing was ended. There you go. So you got your channel. That's your zone. And this is where you're looking for a turnaround back to 156 target. That's your trade. That's your target. That's your yellow to green box. Now this fourth wave right there is gonna chew at least minimum. Let's see. It is 11 days. So this was 11. This is 5 so far. So you have to wait another 6 more days to at least match the time relationship. Okay. So you can do 3 bar. That was 11. That is 5. So that will give you 6, 7, 8, 9, 10. Yeah, so it'll be September 1st or 2nd is when you should at least meet the time quality. 4 versus 2 and 3. 4 versus 4. Sorry, 4 versus 2 with wave 2 and wave 4. It's a pretty clean count. I like it. Keep an eye on. We'll see what the you see this weakening right there is confirming this fourth wave. So it's gonna take a few days. It's gonna take a few days. So typical confirmation for your fourth wave when it's rotating out. Any stock that you're gonna see that is coming down here that had a pretty big run. Okay, what else? DGI, Serena, I mean, I just looked it up. Diamonds, the same thing. Index, you cannot trade DGI. Just that thing went. So what I have here, oops, new high, look for 5 smaller waves. 1, 2, 3, 4. Look for 5 smaller waves to complete 501. So we'll have 5 completed waves. Okay. This 1 to 7 extension is from this high to this low. 1 to 7 is this one. If you're wondering what it is. We can do 61.8. I'm going to do 61.8. That's going to go way up here. That will give you the 50,000 number that I'm talking about. 100 is already here. High and a low, so that's 100, 100 right there. I want to go that far. It's, don't have enough ATR to make that kind of a case anyway, so don't need to look that far up. This is a reasonable number. So if we go here with a wave 2, 2 versus 1, I will look for wave 3 just to have a 100% relationship. You can do this. Do 3 versus 2, go to this. Here's your first upside zone. 458 to 462, 465-ish. I don't think, I mean, that would be kind of weird. Like, we closed above the 455 mark the first time since December 4th of 2024. Me, technically, we're talking, 9 months. So it took 9 months for Papa Dow to close above the 450, 155 print. So when you close it once, now you're gonna have to buy some time and you need to make some room to the upside. Because you're taking out a 9-month high. Okay, I mean, unless we're just making a 9-month high just to fake, to fake out, and then nah, I don't think so. You should You should rip from here. Now it should make room. The close is done as of yesterday. We had with a huge volume and the size of the bar. So that's your 100% because this kind of a huge pop right there didn't happen on this attempt near here or here, right? It only happened here. This is where the volume comes in. Volume gives you that confirmation for a breakout. That happens based on the volume. So it to should be able to make some room to the upside, how I see it. So target 477. What is that? 4.6% upside. Still gotta take some time, but not bad. How much is it up right now? 5.28% year to date. Well, seasonality doesn't look bad. How's the, oh, look at that. 6.35%. Look at these rats, huh? All of a sudden, how they got so excited over a one rate cut. This is, healthcare is almost there. And this is bad. This sector has so many stocks in there, and it's just consumer discussion. It's just, I don't know. It's just this inflation, these tariffs are just scaring these retailers off big time. That sector is just not doing good. You got consumer staples and stuff, materials. This, I mean, you have Amazon and Tesla sitting here. Keep that thing in mind. And XLY. This thing is flat. Tesla looks pretty damn strong in the last week. Too many signs, man, for next week for Tesla, to be honest. Not gonna lie. It's very strong seasonality. We are above 550 and 100 on the daily. And daily chart triggered a go signal yesterday as well. Just the weekly. It triggered a go signal yesterday as well. I mean, it's just very because you see here's your perfect example. Look how when you have a sideways range market, the price action, not the market. When you have price that goes like this, right? Look how signals fails as well because they're fighting the same time. Good signal uh, fires on a trending market, trending price action. Not this, never know. I mean, yeah, the last one went up 1, 2, 3 days in a roll over. This one next day was the inside day, roll over. This one went up one day, roll over again. You see, like this one next day, it went up quite a bit. You see, like previous ones were all fail. I always look at this, how this thing is structured, because this is pure indicator, the signal, the go, no go, the one the guy programmed, the made him. I got them as a free courtesy here. So it just, I'm not saying like that some of them are good, but mine is not here. The last time mine triggered was here. Didn't have it ever since. If I throw a sell signal here, last one triggered here. Nothing here either. And I know I have a different screen. I'm watching one of these. It's just these conditions are just not being met to fire this one. I did look at, remember the one the weekly has a go signal. We see how difficult it is. No go, go. Like what the hell happened here in one single week? The indicator just got, see, look, no go, go, go here, no go. It's just, it's very, this is mine. Next week, bar must be a higher bar. And it was a higher bar. Same thing here. Next bar should be a lower bar. This was a fucking crazy, crazy dip. But this was a very funny looking candle when it closes, you see? So these are powerful signals, to be honest. I'm not gonna lie. I didn't run a scan on this one. Let me see. Do a sell signal scan. Oh, much only one stock shows for the weekly time frame. So you can make a note here to see that was a pretty damn strong close. Let's see. Let's do a buy daily, do a weekly. Thing shows. Oh, because we had a massive day yesterday, so nothing is gonna pop up. Yeah. And do a bullish scan and a weekly. There's a few names. Does not show it up here. There's a candlestick. These are the ones. You know, the weekly. Change it to a weekly. Turn it to a. So now these ones had a bullish. So now this is a weekly bar. So I don't know what a stock is this. So what you're looking for based on this is different. This is not the other ones. This is only the candlestick pattern. So it could fail as well, but like basically what you're looking for is the next weekly bar should make a new should make a should have a higher bar. So in this case right there, so price needs to break this high, 84.69, to confirm this pattern. So we have cat. Oh, this one is going to be done. This is a very strong close. So these are the previous ones. See, higher bar, higher bar. It doesn't, you don't know how far it's going to go, but you just look for the next higher bar. Higher bar. I just wait for the next, this one. IBM. You got this. Should expect a higher bar next week. Okay. So this is the bullish pattern here on the IBM trade. I don't know what is that. Whatever. ServiceNow has one. Same thing here. So now this one turns into an outside bar. This one was a higher bar, inside weekly bar, and then it went Yeah, as long as if you happen to have an inside week, it's okay, but not the lower bar. Okay, that the destroy that pattern. You want to have, so what in this case, next week you want to make sure that it breaks 900, and you want to make sure it doesn't go below 865. So you're sitting at 889. Okay, so you're sitting at 889, 890. So 890, 865. So you have 890, 865, a 25-point risk to the downside, and you're trying to see if it can break the 900 and make a room and, make the room higher. That's the trade setup on service now for next week. If you only focus on the candlestick pattern, they play pretty good. I mean, they can fail as well. So this is the now and NTRS. But these are weekly bars, so keep that thing in mind. That's a massive close. This Packaging Corp of America, PM, here's Tesla, same thing. So if you look at the previous, same pattern, higher bar, same pattern, inside weekly bar, and then another inside, sorry, lower bar against this. You see? So it looks like that is going to break higher, but the next week end up being an inside week, and then it went a lower week. This case right there, same thing, inside week, then it got the pop. This one right there, higher bar. And now we got another one. So next week, Tesla high was 340.55. Any break above 340.55 will confirm this pattern that the signal was good. Then how much room does it make? Well, then we're gonna have to measure. Take out this high, so you just focus on 340 and 348. If you break that high, then we just go back to, then we run some swings and stuff. Let's see. I don't know, man. It just, what it is right now, that this stock right now is fighting this swing to the downside. Okay? Explain you some of the things. You how Show you how swing works with time and price. B number mean is the number of bars. Okay, when the trend continues, when the trend goes up, meaning when you have a higher highs and higher lows, you look for a higher high, right? Let's say you had a first initial swing last 8 days, then you have a higher low lasted 3 days or 4 days, doesn't matter. Okay, then the swing that goes up should last longer than 8 swings. That's the minimum. If the first one lasted 8, it should last more than 8. If it doesn't last more than 8 days, meaning that it means it's going to be shorter on price. Sometimes it can increase on price, meaning the stock can move a little bit more wilder move. So that's all fib extension. But your focus is on only time. How much time each swing is taking when it turns direction. Okay? Let me show you an example of an S&P. It's going to be much easier for you to understand. Now, higher the time frame is, much better your reading is gonna, like, you're gonna have a much better read. Okay. Now what happens is that every time when you're gonna have a downswing, it's gonna start counting the number of bars. And then when every time you have an upswing, it will start counting the number of bars to the upside. So the point is, like, whenever the upside bar will fell short against the previous swing, you're gonna have a problem if you take out that low. I'm gonna show you that example. Let's start from here, from October lows. That's right here. Okay. So we start from here. First initial swing, 16 bars. Down 6. Swing went up, 19 bars. You see, the 19 is greater than 16, right? Now we move more. Comes a downswing, 13 bars. 22 bars. The 22 bars is greater than 13 and is greater than 19, correct? Number 3 bars to the downside, 13 bars to the upside, right? So basically, I mean, you don't want to, if you only take in a 3 swing, 1, 2, your trade should end here, right? What you're looking for is any downswing compared to these swings should be greater. 3, 10, 3, 4, 6. Here comes a problem. 5. When the price reversed, it took out this low. Market put a top right there. Every time when the bar will fell short against your previous swing, and if you take out that low, your top is in. Just remember that. But you don't have those swing counts. So, so you'll need me. So in this case right there, we had 7 weeks to the downside. We're up 18 weeks, which is fine. We already met 17. We exceeded well above 7, which is fine. Whenever we're gonna have a downswing here, okay, to the downside, meaning that we're gonna have a 3 lower weekly bars that will turn the swing down. It's gonna happen. Of course, it will happen at some point. Once it will happen, and then it has to look for another swing back to the upside. If that swing, let me show you, draw that thing for you so you understand. I don't know where the top is. Neither do you, and nobody does. Okay, whoever's talking and giving you a big hope on X is an idiot. Cut to the chase. You have an 18 weeks to the upside rally so far, correct? Anywhere the top will form, the top will you will know when you have 3 bars to the downside, the swing will turn down like this. This is a downswing. Here, 3 bars. 1, 2, 3. 3 bars. 1, 2, 3. See, every time when you're gonna have 3 bars to the downside, the swing will turn direction down to the downside. So when that 3 will happen, that the line will appear like this. So we're gonna have B3, correct? Meaning that it's gonna be a higher low. Higher high, because it took out this high, right? So let's say we're gonna have B3, we're gonna have 3 down weeks. The next swing up must be greater than 3 weeks. If that week right there turns into a 2 weeks, okay, clear this thing a little bit. Let's say you do 3 or 4, whenever the swing will turn down. Pay attention. Either 3 or 4, could be 5. I mean, I don't know. Okay, let's assume for a second it's going to be minimum 3 because the average before has always been 3. 3 here, until this was 6. Okay, so most of the time is 3. And then you just price goes right back up. So you have 3 weeks, right? So your next swing, which is going to be up, must be greater than either 3 or 4. If the swing there, okay, turns, you don't know that, okay, how to confirm that. Let's say if the upside will be only 2 weeks, downside was only 3. With that 3 weeks low, if the price reverse takes out that low right there, that will mark the market. That's just what you're going to call the market top right there. I will write that thing down on a piece of paper. Until then, there's no one knows where the market top is. You can have few sessions down, whatever the case is, but this is your main picture, is your weekly bar. Higher the time frame is, better the read you're going to get on the market. Less is just shorter and shorter the time duration is, more and more the noise is going to be. So you rather focus on a bigger picture, okay, than the day-to-day noise. So it's going to have the turn down at some point, at some day. I mean, nothing is going to go off forever. You know that, and I know that, right? So now this swing right there is the 34%. This is the second largest swing since COVID low. Just remember that. Since the COVID, okay, the swing was 47.5%, but it only took 11 weeks. In our case right there, we are almost 18 weeks instead of 11, but on a percentage wise, we're only up 34 against 47. This is a COVID low right here. You don't need 15 years of data to price to analyze price. 4 or 5 years is more than enough to trade the market. Okay. So this is March 27, 2020. This is looking at COVID low. I don't know when you're ever going to see $2,000 price on S&P. So ever since, this is the second largest swing percentage based since the COVID low. Now, if you look at the time duration, it's not that as much as bad. It's only 18 weeks. These swings here 22, 19, 16. So let's find out the longest one, 49 weeks. Okay. So yeah, I mean, this was Fed was in whatever. That's not the point. Market is fractal. Okay. It doesn't matter. We were pumping money and we're doing this and that. Market is repeating the same swing, same price pattern over and over again at some point. At this time, I might just run for 49 weeks as well. We don't know that. We can, we might not. But that's not the point is that you're trying to define to see like, okay, how much is the usually swing last based on the time duration? You just go back and you just look at them. You're just trying to you're trying to see like, okay, what is my average? Right? So you look for the highest, then you look for the similar ones that how many of them were so close where the swing, the swing turn direction. Gann swing is a very interesting swing counts, but gonna take a lot of time for you to fully understand how the relationship swings work. It's the very same concept with Elliott wave as well, because you're comparing wave 2 with wave 4, because those are corrective waves, right? They move against the trend. This one, you're just comparing swings, where the swing was down and where it went up. So every time when it turned down, it turned down like this when you see the line appears to the downside. And then every time when it resumed back up, the line turned back up from black to green. That's what these black and green lines are. These are unconfirmed. I left them like this. It tells you exactly where the trend reversed to the upside and when the trend was down. We're not talking about the bounces and stuff. Like in between, you could have a one week up and we can have 1 week down. We're looking at the actual trend. When is the trend was confirmed 100% that the trend is to the upside. Every time when you see the bar, which is black, okay, when it turns green, it means the trend is up. Okay. Same thing here to the downside. The red line, when it from the line is actually stays black throughout the whole chart. I can change this line just to be up and down. That's just a simple way to looking at it, but that's very hard to determine when was the actual swing that actually turned up or down. You're just looking at up and down line. When the price went down, line went red. When the price went up, the line is green. Same thing here. Just an up and down lines. You can do the trend lines, you can do the same thing as well. Okay, that gives you a trend. The unconfirmed one will tell you exactly where the trend got the confirmation. It was right here. It's not there. At this high. There. 5,700. That's when the line turns green. And we can just go back to the daily time frame. Now we're cutting the time frame. So now the swing will take more directions because now we're coming into a smaller time frame. Right? So same concept here. Number 4, 9, 3, 8, 4, 12, 7, 38. So the point is that your upswing always will be greater than your downswing. Yeah. Oh, Gan, yes. Yeah, because he spent a lot of time on astrology, you know? So he's accurate. Yeah, I mean, he went into those Mercury and we got all the astrology, all the planets and stuff. So he went pretty deep. So he spent a lot of time by analyzing how to time the market. But his swing trading has he's a buyer at a 50% retracement of a swing up or down, or seller at a 50% retracement, and he's a buyer at a 50% retracement. That's his swing was. Then some then the over time and stuff, and then people's trying to add a bit more Optima, spend more time analyzing the price and stuff. They just had massive courses and about swing counts. So I like this trading is basically what you see here, goes up and down lines. It's a different software. I cannot really actually match them because the coding is very difficult and very different. You cannot use Optima language in TOS. You cannot use TOS language into an Optima. So I have to learn both of them, so which is just fine. The the concept is the same, but I like this one. It's just faster. It works with the price. I don't have to sit here and guess ABC or WXY, all that. I have a price, I have a signal, I have a stop, I have my fibs, I have content right up on the top, what I need to look for, where I'm gonna hit a wall. Okay, that's it. That's how I trade. I have RRG. So these are the tools that I have. I don't need anything else. If somebody would have asked me like, hey, would you be interested in learning some? I don't need, this is what I want. Okay. This is exactly what I want. This is how I want to trade. It saves time, quick scans, filter the stocks, apply those conditions. It fits the checklist, put the risk on, leave the trade open and see how it plays out. If the trade fails, not the end of the world. We'll find another one. I think it's just the smartest way to trade. I mean, if you want to make things more complicated, you can always go to an Elliott. You can always sit and count your swings on your own, however you want to change them. You want to do simple ones, you want to do the volatility swings, you want to do a percentage swings, you can do all those. So you can do volatility swings. So those are different swing counts. They don't turn directions as quick as the 3-bar swing does. You want to do the percentage swings, you can do those as well. Where's the percentage swing? Here. You can do the percentage swing. Now these are based on the percentages only. So there's a totally different, same concept, I mean, but it's just a little different way of counting um, prints. It's different swings. It only measure one high swing here, one higher low, and it just been higher high ever since. So now if you just go back to a 3-bar swing, you see a 3-bar will give you more turns, as you can see, because these are all based on those 3 lower bars or 3 higher bars. As long as the higher, the trend continues to the upside, meaning is strictly based on higher highs and higher lows. So there's many different ways that can be done, but these ones here, the number 3, it filters, it kind of like not gonna let you marry to the stock forever. So if the swing turns down, because it's gonna take few days now for stock to kind of like take a bit of a beating and then just to recover back up. And that's what it is. So now basically what it is like, okay, well, swing hasn't turned down. Oh, actually it went down. So it went down 3, right? So now if we look at on average, what do we see here? So we have 3 here, 4 here, 3 here, and 4 here, right? So what is the average now that you see? But give or take 3, right? Worst case 4. So what happens after 3 and 4? Market goes back and make a new high. So we, in this case, we hadn't made a new high yet because we stopped yesterday. It'll become a few. All-time high is 64.81. So we're down 3, right? So if the swing will turn up, because right now the swing is down, right? Remember we just looked at them before? Swing is down. Why is down? Because we have a 3 lower bars to the downside of 2.1% decline the last 3 days. Now we need to take out this high of 64.81 to turn the swing back up. So if that happens either on Monday or Tuesday, okay, that will confirm the swing is back to the upside. Now that upside swing must be greater than 3 days. So we need to make sure that low right there must hold. If it goes up only 2 days and a price reverse takes out 64.33, market is going to have a bigger correction. Okay. So when I'm selling because I have a reason for it. If I'm not selling something, I'm watching. I'm waiting for the time to pass. It's not about the price all the time more. When more it comes into a price, time though. Time is very important. I understand that I cannot perfectly time everything, but I can come pretty close. Last week, if you remember, I told you that 64.80 is a very sticky number. I don't know how many of you remember. I've been repeating that thing. I was like, watch the 6480. I've said that thing. I can scroll up on the Slack main chat. You can see it. I was pretty specific. I even mentioned that thing pretty many times. I was like, watch the 6480 print is a very sticky number. I said it because I was watching multiple different time frames. There's a stack of fibs are coming right to that number. Look where we just backed off. I mean, whatever. I mean, we'd rip right back up. See, 6481. We topped right at 6481. I was talking about this thing last week. I'm a master of fibs. Don't mess with me when it comes to the fib price. You all know that. But let's see what happens. So we're gonna mark the 63.43. Got to swing down. We need to make sure that we break 64.81. Okay, to turn that thing back up. Or I mean, if we, I don't know. I mean, are we expecting a 1,000 point drop on Monday? I don't know. Um, so we'll see what happens. And then it's the last week of the month, anyways. So I have a pretty good feeling that the market is gonna try to hold these gains just to until Friday, to end the month on a bit, on the up note. And then we'll see how we go with September. I mean, we're going to be back to the same story. The first job report, then we're going to have a CPI, and then we're going to have a PPI, and then we're going to have a rate cut. I mean, blah blah blah. So same BS, just a different month. But next week we might see some action because of Nvidia earnings, which everybody's going to be watching those. Plus, we have some other software names are reporting as well. This So we got okay, mango. So we have a mango here. Box got a pretty big pop yesterday. I don't know if you saw it. I was looked at it yesterday. I think this time got no, I was wrong. It was something else. No, this one, Joy. Yeah, this one had a buy signal. Got a nice. No, I had it confused. Which stock did I looked at yesterday? I don't remember. One of these stocks here had a pretty big pop yesterday. So I don't know what company is this, Joy. I have the buy signal here. Well, if this stock goes, I'll target this. That should be a lotto right there, 54, 55. 41% implied volatility. That's a matter. This buy signal triggered yesterday. These were not easy to, this thing can flush out in a second. I mean, or earnings, we just can't, just a wild guess you make and roll the dice. You're gonna hit it or you're gonna miss it. Um, I gotta go. What was this? I don't even know what this company does. Anyways, Coles, Abercrombie, fine, nothing. Nvidia, Snow. So let's
Could
check
you look at Coles, please?
KSS. Why am keep coming on this damn screen? Colts. Yeah, it's a mess. It's a point estimate. It's nothing. It's 95. Oh, got a huge pop, all faded. That dull stock. Um, Snow. Nothing here. I got a mean reversion sell signal. I had a pretty big move. Oh, this one. Nothing in this one. Stuck between 50 and 200. A sandwich trade. Um, crowd. Same thing. Sandwich trade between 50 and 200. Man, these damn softwares. HPQ. HPQ got a mirror. Same thing. You see, wick. Sucker just went right back to the double bottom. It's been rallying ever since. See, came down, run stops, put a double bottom here. Look at this. Yeah, I would. Um, the only thing that I could suggest you, I mean, I manage trades anyways. I think I do pretty well. Automatic. It's the close because if it's matter than the actual spot price, you know. So something to consider, meaning that if the price comes back down in this session, takes out this low, buy a wick, the session is still going, and you have an actual close above this price, above this high, I would give another extra day to confirm the trade to either to cut or no, or I can just simply cut them in half. I've done it with Netflix and this Darden restaurant, the trade that we did. You see the same wick, right? The close was here, but Optima gave me the options, the buy signal at the same time on that same bar. So that's what I held the trade. Paid over 400 bucks, almost $400 just by holding a trade. It's just because it just because the thing is this, you picking out a trade that has taken this much beating for weeks, over a month. Okay. So bottom ones, they're a little tricky, meaning that you trying to pick a bottom, signal is trying to work with you. That gives you the initial pop. They're like, okay, fine, that is the bottom, and then they run those stops down to stop everything, to stop you out, and then they just run them right back up. You see? So these are the wicks that that I have to keep an eye on. I know how to manage. So if I'm in a trade, let me manage it. If I'm gonna cut it, just cut the trade. Okay. So if I'm willing to hold it, I'm not cutting it because the price went below it here. I'm watching. So I always confirm it with Optima as well. Yeah, sometimes it's painful just to cut a trade and then end up as being right. Right? So if you risk in this, I'm pretty sure you can risk another point or two as well. It's not, the premiums are still not going to zero, right? So 1 or 2 point not going to make a difference. We're just fighting. I I said it. I mean, I could use this, but then the point is like you're using such a massive the window to the downside. So you say this bar, this low, this bar, this high. Just used one. Previous day bar high is the stop loss. That's it. That's where you define, you draw a line. That's the line in the sand. Price needs to stay above or below that line. Now you want to use 2 bars, you can do 2 bars. But I will not go more than 2. If the conditions are met, price should turn around from there, like the previous ones that all played out over time. There's nothing different on those. The trades that we we played, that they're perfectly fine. Okay, again, they're fine. So we don't have that control that the wick is gonna come, is gonna chop our head off, and then they're gonna run them back up. So don't overreact to anything. Let me manage it. I know what to look for. So if I'm in the trade, I'm in. If I decide to cut them, I will simply send the alert out like, yeah, I'm gonna cut the trade out. I did with I did with coin, right? 301. Price went up down to what? All the way down to 290. Now it's back to 319 because of yesterday pop. I mean, it's fine. If I would have held the trade, I would be probably like what, sitting almost break even, give or take, right? Wouldn't take a loss. It's okay. That's just the nature of the game. Am I interested in buying this stock? No. I'm not going to touch that stock until I see the buy print on the screen. I am not a buyer. I don't care if this thing can go to 350 tomorrow. I'm not interested. If it confirms the RRG, it could be a dead cat bounce. You don't know. Could fade another 10, 15 points on by Tuesday or Wednesday. We don't know that. That's just not the point, you know? So I said the show is over. So you remember how the swing count works. Price is price. Price upside we can always measure with extensions, fib extensions, right? We can take the high-low swings and stuff. That's not the issue. The main focus is the time relationship with the price. The price will come with the fib extension, but the time to the previous swing is what you more focus on. That's what you pay attention to. When and how long it took. You don't know how long it will take, how long it took the previous swings to turn directions up and down. You take that time average is going to start giving you a pretty good clue where you at now. What was your previous day's average was. Market is fractal, it's just repeating the same thing over and over again. You see, it happens. This is the low that we're coming off from the bottom, right? Four down, three down, four down. You see, three down. You see how they're matching. This one's seven. We haven't had seven yet. That happened back here. So this is on a high note so far off this entire move that we have off this low. So we'll see. Let's see what happens. Now we need to break higher, meaning we need to break above 64.81. And if that happens, the swing line will turn up like this. Okay. And then we need to start counting days up, which has to be more than 3 days. If it fell short to 2 and the price reverse takes out the prior swing low, you can pop the bottle of champagne. I would open up the fourth wave on a wave count if that happens. Until then, just leave it open the way it is. Nothing to fight there. Okay? ASS, no, I mean, and some, man, great quality stocks, man. Some of you guys we already looked at them. This guy, day and night living on this GME thing that's going to become a $1 trillion market cap company one day. I mean, below 50, 200, man, well, what a morning star yesterday. So a little bit of it's just so choppy. There's no volume. As a buy signal, still valid. I'm complaining. But they're gonna run them, they're gonna squeeze them through, but they did not. But this for weeks, you just sitting for nothing, hoping for a pop. Company doesn't make any money at all. Um, I think it's all gonna be all next week is gonna be all about the Nvidia and the month end show. Can we have a month end selling? Well, that's another thing to watch as well. Are people gonna start trimming and stuff? But if you look at the growth, it's just it's the rotation that we're tracking. You see, it's rotating out, so it's gonna probably gonna take few days. I don't know. It can turn around, but if we go back here, if we look at the growth, let's say coming off from the lagging quadrant all the way back here, look, it went up. See, it fight it back here, work his way in, got more strength. See how many times it tries to get down here, but look how many times it reverses. See, came close, close, reverse. Oops, look at that. I just been fighting around, showing strength because Microsoft, Nvidia, those stupid two stocks were running. The rest of the stocks were all puking. You see, it's only two stocks doing all the work. So the question is this, that this rotation of growth since March of this year has not went back into the lagging quadrant, correct? We just looked at it through March. I just slide this whole bar, you'll see it. It has not, because it has to go clockwise, right? So 12 o'clock here, 3 o'clock here, 6 o'clock here, 9 o'clock here, right? It has not went here. Now it's sitting. You see, it went up here. Just watch this one. I can remove the other one. Value, take that. Focus on this. It just, you see, like it came close by going there, but it did not. See, came real close. This is what just lost all the alpha. It's just become more choppy. Now you see, this last 6 days has pushed everything back down. Now it is the hook where that formed is inside the lagging quadrant. So the swing is down. I don't know. I mean, we gotta something to watch. So we'll see what happens. Okay. So we can do the Vanguard is the same. We can do that to Vanguard. Take this. Here's Russell. Look at that rat. Maybe Russell's on fire right there. Look at this. So we have do this. Let me show you a small cap and a growth. Take that one off. Take value. Okay, let's do small cap growth and mega growth side by side. So let's do from June. It's fine. See the same part. Look how growth. Look, there you go. You see, that's where that took that turn. That's where the turn was right there, man. 812. That just went nuts yesterday, right there. See how much is extend This is your benchmark, right? So in order for you, in order for security, like in order for RG security to gain momentum, more alpha is to push it further away from the center point. More and more is gonna go far, bigger the move is gonna be. Look how far it went. So all these rotations that takes a much wider turn are those are the ones that, I mean, they're not easy and they look pretty good here, right? When you actually have the money on the trade and when the actual trade is moving over time, yeah, that's when you're gonna get the panic attack. Thinking like, should I hold? Should I cut it? Oh, I made enough. Should I just trim it here? It's like 10,000 different things in your head. But when you actually play a rotation on a stock that actually makes these wild swings, and this is where you actually move that, I mean, yeah, you were gonna catch them. Let's say if I would put the trade here, look at this. Now it's weakening. The roster, right? The move that it had. Look, this is what I caught him right here, somewhere around here, right? I don't have to look at the date. So I caught him here, somewhere around like going this way. And look how wide this rotation went. See? That's what we need. It would be nicer if it goes up like this. Now, if you want to see, there's so many of them. I mean, right. Now here's MetLife. There's two. There's so many. Well, look, Nvidia. See, Nvidia follows the growth. Watch this. Microsoft. These three are. See, these are the two that push the market quite a bit, right? Watch these ones. Watch how Microsoft hugs the growth. Nvidia is just the one that finds the alpha for the growth to move the market. But look how close that they work. See how close they are? But Nvidia is on its own. This is a sucker that moves the market. Now look at them. Said we ended the day yesterday. Nvidia earnings are. I think I don't know. They're gonna toast everyone because I'm looking at Nvidia. Let me see. The last time Nvidia got out of the lagging quadrant was back in 4 April of this year. So from April of this year, now it's September, end of September. No, sorry, 5th, because it made another turn back up. When you have a rotation that improves like this, and then it turns back instead of going this because it has to go clockwise, right? Instead of going this way, it comes right back down. That is where the most of the swings are flush those stops to the downside. When they will flush those stops right there, that's when the price will turn, because it sooner or later the rotation must go clockwise, because it cannot just stay like this. It has to complete the circle, you know? So it happens a lot, I know that, but you have to define risk, because if that rotation right there is going to take several more days if the price start making lower lows, so you just gotta have to sit on that trade, and you're gonna take a lot of beating. You don't know how much the price is gonna push. So it just see, since then, since the 5th, you see the 5, the date is changing here on a slide, that thing. It has not went inside the lagging quadrant, but now it's damn close into the earnings. So I don't know. I mean, I might do a put hedge on Nvidia. We can do that, and we do the Vanguard. We can do a small cap value, and that's all. Good thing you guys have all these things to see. Yes, I spoil you. I spoil you guys big time. I don't know who has them. These kind of things that I show you guys all the time. Let me see. I might do a hedge on Nvidia. It's ripping back up. I mean, things can turn around. It's such a B stock. I mean, has a sell signal, has 183.97. If this breaks, this thing is going to go right back to 191. Could be 202. That's your upside right there on Nvidia. Okay. That is only if it breaks 183. So if we're willing to make a bullish bet on Nvidia, okay, I'll give you a hint here. Make your zone. This would target this zone. To this. I'll explain you why. It has a sell signal. Rotation is going toward the lagging quadrant. Earnings, anything can happen. Nobody knows. Okay, nobody can predict these earnings. It's always a big surprise. If you are bullish, you think that the sell signal will fail. Okay, and Nvidia will report decent earnings and the stock will pop. Your upside bet is 183 and 191, meaning that you're looking to see the signal will fail and they will report good earnings. So you're betting 183, 191. You can do a call spread or whatever you want to do, right? If you're making a bearish case, you need to take out this low of 168.80. So your downside bet would be 169, meaning because you need to target this low. If you don't want to target this low, you can make this take the target of this low right there. This low, this zone right there. This zone fails, this thing will take a leg down like this. Okay? Toward this 158.29, toward this fib price. Okay? That's the bull case and the bear case I can make. But which direction that thing is gonna swing? Geez, I wish I know. If you are bullish, okay, this is your upside strike prices. If this two strike prices breaks on a strong earnings, your upside target is gonna be 202. Okay, based on this breakout. You're looking at this. If you are bearish, okay, and if you think that the Nvidia will roll over, you betting 171 okay, to take out this swing, this swing low or this swing low. Either or would work. 2 3 2 point, not gonna make a big huge difference. You're betting this thing to break to the downside. That breaks, your 50 is at 166. That's gonna be your one target. And next downside fib is at 158. That's your downside. That's your downside bet. So you've got to always measure it once when if that happens. Okay, so we're right there at this ATR line. Do you see this blue line right here? It's an average true range. So the price is right there. Either it's gonna break here or it's gonna break like this. Well, we're gonna find out. It's a daily bars anyways. Nothing is gonna move much until the earnings. Okay, so you need to take either this low or this low to target this, and then we can look it up when the week starts. Or if you are bullish, thinking that the Nvidia will report decent earnings and it's gonna, do well, whatever, then you make the case of 183 and 191. It's gonna be slightly out of the money. It's gonna have a much, much better payout for sure because you're buying a little bit out of the money and, you know, Nvidia works really good with fibs. Keep that thing in mind. Very beautiful stock. God, that stock is so liquid, man. With $4 trillion market cap company, I don't know how much of a hit that stock is gonna take to wipe off how much market cap. That's always gonna be a challenge. So, okay. Oh God, tired. I've been up since 4:30. Okay, I gotta go. I gotta take the car to a dealership. Now I gotta lunch outside somewhere. All right, have a good day. Show is over. As always, thank you.
Thank you, Mo.
You're welcome.
Have a good day.
You too.
Thank you, Mo.
You're welcome. Thank you.